Hi guys, welcome back. So today a lot of the Chinese stocks dropped quite a lot again. A lot of people want to know what I think about it, what's my strategy now. So I want to share more about this. But first, let's go over the market first. Today is one of those days again that the market didn't drop a lot, but the individual stocks dropped a lot. Just like yesterday, 10%, 20%, and that's usual. So if you have stocks in your portfolio today that dropped more than 10%, you are not the only one, okay? We are all in this together. I am sure that everyone has some stocks in your portfolio, if not all, that were traumatized these 2 days, okay? So yesterday I said if the Nasdaq dropped below this uptrend line, the next support would be here around 12,900 to 13,000. So it did drop through this uptrend today. So now we are challenging the next support on this line, because every time in the past we dropped to this support, we would get a rebound after. So now we need to look closely whether this support can hold it, because otherwise we need to look at the next support, which is at the 120-day moving average to be around 12,600, and then also the previous low on March 5th at 12,397. But let's not go that far first, because right now I do see some fear going on in the market. And the good news is today, after the whole month of correction, we finally see fear at the fear and greed index. That took long enough. This is what the bull market in the past 12 months had done to us. As we see, 1 year ago in March, it was extreme fear to be 13. And I remember on this day, June 11, when Nasdaq dropped 5% in 1 day, the fear and greed index were already at the extreme fear level with just 1 day of dropping. Versus this correction, it took really a month, actually more than a month of dropping to be at 40, barely at the fear level yet. This just shows that we are used to stocks only going up in the past 1 year. And usually that's how it works. The market doesn't stop dropping until there is enough fear, because they don't want us to buy the dip. They don't want us to stay calm. They want people to panic sell so someone can grab the share at a bargain. And until that happens, the market just doesn't want to stop dropping. So right now, at least we see some signs of fear, and that would be a good sign already. And for the VIX index, I said 2 days ago that we have reached the gap from 1 year ago when the VIX started to spike up for the pandemic, and it would act as a temporary support. So it has a need to rebound from here. So that's why we saw that it created a new low of 18.8, which was exactly the gap. That's why we saw that when it reached a new low within the past 12 months to be 18.8, there was a need for some rebound as we have reached a strong support. But I don't see it spiking up too much from here, because it has also a strong resistance at around 22 to 23. So at most, it would just move up and down on the sideway for a little bit. So back to Nasdaq. Let's hide the moving average. On the daily chart, we are still moving up and down within this range. And right now we are at the critical level. So we need to look closely whether this support is holding. So tomorrow, if it rebounds from here, then we should be okay. This is the 1 hour chart, and I said that I believe on March 5th we had the bottom already because of a lot of the fear sell that happened already. And if they let us buy back what people fear sold on this day at the same price, this is when I would really worry about it and may not pick up those shares. So for now, let's forget about the scenario first and go on with the first scenario, where we had already saw the A, B, and C wave of dropping. And then we should be able to see an A, B, and C wave of rising. And within this B wave, I believe in the last couple of days, we should be within this tiny ABC correction in the middle of the uptrend, which make us right here today, given the scenario that this support is still holding. Okay, and then about the questions of why the market did not drop that much, but the individual stocks dropped quite a lot. And for this, I would have to go back to the same issue I've been talking about for a few days, which is about the Fed not extending the SLR exemption so that it would hurt the ability for a lot of small to medium caps companies to get loan. And I think a lot of capitals are worried about the cash issue for many companies that have low cash balance. And that's why we see a lot of companies recently raising more funds or releasing new shares. And then I think also institutions and the market would see this as one of the first signals for the Fed to start tightening the quantitative easing, which had been started since the pandemic last year, because we are seeing a lot of news for recovery and how the vaccine is rolling out. So I think from this angle, a lot of institutional investors might be worried that it would mean we are near the end of the quantitative easing, or starting to tighten from here on. So recently we have been seeing a lot of bombs for individual stocks because they need to release new share. For example, yesterday it was WIMI that we talked about in the video last night, and also QuantumScape also released new share yesterday, and they both had broken the price of the new share. And today we also saw MP Material. It's been 2 days in a row we saw a gap down below and continue selling off with massive volume too. So we see this kind of bombs for individual stocks, especially the small to medium caps, bombs everywhere. So this would explain why a lot of the capital, a lot of institutional investors have been taking exit from the small to medium caps to avoid these kind of bombs, to stay safe. So for this issue, what's our strategy? Other than just staying with the mega cap, which we can be sure about the cash balance to be sufficient, like Apple, for example. Other than that, like last night I have addressed, we can look at the companies who just did a recent offering and have been subscribed successfully. Like for example, WIMI now, we know that they just did a share offering. So after this, they should have sufficient cash balance. But the problem is that right now they have not finished selling this 83 million worth of stocks, and it has broken down the share offering price of 7.5. Right now we are at 6.3. So it would create more difficulty for them to sell the new share. So that's why I would think right now it's better to get more news about how the sales is going for the new shares and see the stock price being more stabilized. But for now, we have already reached the support level, which I talked about last night at 6.3. So that would be the first support. And it does have a need for a rebound from here. So I suggested to buy the dip at 6.3 first and then trim it back if it can rebound to around 7.3 tomorrow. For anyone who are at loss with the WIMI position, to lower the cost like this. So that is one way to choose the company who just finished the share offering, so then we know they have sufficient cash in hand. And the other way is to choose the companies that would be in the industry that aligns with the government strategy. This is when, even with the worst case scenario, the company might be at the risk of bankruptcy. We know that the government would most likely give a bailout because of how important the industry or the strategic position it would be. For example, we know that MP Material would be quite important for the US government because they are the only source for the US to not rely on China for the rare earth. So we know that even though they run out of cash, the US government would more than likely give the bailout for this company. This is one example, and for me, of course, I would prefer the new techs from my Chinese companies because I have analyzed many times how the Chinese government had the strategy for a big picture of the smart city. And a lot of the new techs involved in this would align with the government's strategy. And I would think that even the worst case scenario happens, the government would more than likely give them a bailout. Like we know, this is what happened for NIO last year, because the EV and the NIO's battery swap stations business model and the new energy would fall in line with the Chinese government's strategy. And now for the smart city and smart logistics that they're building for the next 5 to 10 years, we just know that EH and WIMI, for example, would be part of the system. So I'm not too worried about EH and WIMI, especially EH is already in talk with the Hezhou government, as I shown in yesterday's video, that the Hezhou government might be sponsoring 2 billion RMB to build the smart air mobility system with Yihang together. So that would be one way for the government to support the new tech company. And we know that WIMI also aligned with the plan, and they just did a recent offering. So right away, I am not worried about EH and WIMI in terms of their cash. And Luckin Coffee, we know that they currently have already 700 million in hand of cash, and they're talking with potential investor who would be highly interested into investing another 250 million. So together they have around $1 billion of cash in hand within a month, compared to their market cap of 2.3 billion, and more than 60% of the stores are already making profit. So they should be expected to generate positive cash flow in the near future if they don't overexpand. And for Zepp, it had been turning positive margin and profit for years already. They have sufficient cash to sponsor all these projects and companies without the need to release new shares. So right now for my top 5 holding, I'm not quite worried about their situation under the attack of this anxiety and concern about the tightening of the quantitative easing or the SLR exemption. And then the next question would be, why did the Chinese stocks drop so hard recently? Well, 2 days ago, I showed the news about the few governments having issue with the Chinese government about the Xinjiang human rights issue, which to me should not be new news anymore, but would rather look like some fear spreading and wash selling by using some old news again. Because we know this issue for a few years already, but why has it been heavily used during the correction of the Hong Kong index and the Shanghai index? Because we know the Hong Kong index had been experiencing heavy correction as well recently. It had dropped more than 10% from the top, and I think it's almost near the end. If not now, then maybe we just need to give it another 1 to 2 more days. And same thing with the Shanghai index. It had dropped to this level of support already, not far from it at least. Also dropped more than 10% from the high. So it looks like it's enough correction. So the correction of the Shanghai and Hong Kong index would affect our Chinese stocks, of course. And also because of the news recently used to attack a lot of the Chinese stocks. But when we look at the historical chart of the Shanghai index, we see that the chart has been moving sideways mostly for 10 to 20 years already. So it's about time when it can grow for real. And when it does happen to explode, we need to fasten our seatbelt because it might get explosive. It has been low on volume for years, and recently it's increasing the volume. It might show early signs of the rise of Chinese stocks, something we can keep the hope for. And last year in 2020, there are several times we had the news for the Chinese companies delisting. And every single time I would treat it as a Black Friday news. Like for example, I bought NIO during the May delisting issue. At that time, a lot of the Chinese stocks dropped 5 to 10% a day because of the delisting subject. So that's why recently I have been moving more of my stocks, switching more portfolio into Chinese stocks, because if they have been using the news to attack the Chinese companies, then I would treat it as a Black Friday sale event again. Like for example, today I added more EH at 38 and then 35 again. And I also added more WIMI at 6.3 because I know that the new techs would evolve faster in China in the era from 2020, because we know how much the Chinese government is currently supporting these new techs incubating a lot of the companies to be the leader of the industries. A lot of the new techs involving in the smart city ecosystem. It's what I want to get in strategically, which I have shown many times, like the smart logistic, the new energy, the EV, autonomous drive, the AI, and the AR technology, etc. So that's why I'm not worried about the recent attack from the news and the correction of the A-share. Because I think a lot of the institutions are thinking what I'm thinking. They know there are so many opportunities in China going on right now, and they think it's too big to miss. No one wants to miss out on this. And if the political issue get worse, it would only encourage more Chinese companies to be listed in Hong Kong Stock Exchange. And because how much the China opportunity is attracting the world's attention more and more, so the more companies listed in Hong Kong Stock Exchange, the more it would help the Hong Kong financial market, and the more it would weaken the US financial market to be the financial center of the world. So I do think this is what both countries do not want to see, right? So that's why I have been treating the recent correction, the recent days, the recent attack of Chinese companies to be a sales event to buy in a lot of the Chinese companies. So that's it for today. And I know everybody had a tough day today or this week. So take a break. If you still have cash, I would try to help you to average down and lower the cost. And if not, you can take a reference to evaluate your portfolio according to your strategy. And if you have done everything already, then maybe you can just sit down and relax or do some sports. Okay? Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I will see you tomorrow. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.